to edit it out, and we're about 11 minutes in. So this whole segment probably not going to be on the replay once I get my hands on it. Michael says I have a pocket watch that I bought at a garage sale, and on the back is engraved with "It's about time." So I asked about it, and here's the story. Oh Lord, he's gonna tell us. We're talking about money, and he's typing up a whole story about this pocket watch. And there's the story about the pocket watch. Ask what time it is, and it's gone on for a while. Until the boss handed him his pocket watch with the saying, "It's about time." Okay, now here we go. New trolls. U.S. government is scamming everyone out of their money. Gold and silver are real money and have been for thousands of years. Here we go. So that topic we're going to talk. I already covered that topic on Saturday when we were talking about mortgage and real estate. However, we're going to be talking more about the cryptocurrency relation to that tomorrow on Tuesday. Today we're going to be talking about some investment opportunities that are going to occur because of the new changes and policies and stuff like that's happening in the government. So while the government is not scamming anybody, gold and silver is not actually money. It is a precious metal, and those precious metals can be valuable to the people who want to buy them. And if you own them, you can potentially sell them for money, but you can only determine the profit based off of how much you paid for it, how much you're paying to store it, and how much you get paid when you sell it. Now, if you're buying percentages of it, fractional transactions, where you are trading, then the best way to go with that would be ETFs, because if you buy the monetary value of the gold in a stock option instead of buying the gold in a stock option, then you can sell it a lot easier, and then you don't have to worry about that. But they're not scamming you out of anything. Government will call all gold, all gold will need to be returned to the bank. I don't know that that's going to be a thing. People can have and hold gold as it stands right now. I can look into it to see if there is a mention that the bank might potentially start calling into possession of gold, but the gold is being bought up all over the place, and whoever is in possession of the physical gold has to worry about somebody else finding out about it and robbing them for it. So I don't think that and to be fair, Michael, when the government does something, they don't actually expect people to voluntarily surrender their stuff. So I believe that the government, if something like this was to happen hypothetically, is that they would do some type of seizure scenario where the IRS will audit you and then seize your assets and end up keeping the gold. The way the government seizes everything, they don't ask you to voluntarily give up anything. They just take it from you by force, because that's the American way. The central bank. Well, okay, so I trust Michael's recommendations, because Michael does do a lot of looking into gold. When do you believe that this is supposed to be happening? Because I didn't see anything about it today. Before we get started on our topic today, I'll take a look real quick. So when did you see this? And then we're gonna take off on it. This guy said cryptocurrencies can be useful, but guess what it runs on? It runs on computers that use metals like gold, copper, and silver. Well, that is a smart conservation that you've been able to understand that gold and silver is actually being utilized in industrial, but it also has a monetary value in investments. How you doing? Special shout out to Mr. Satellite. The link is in the comment section for YouTube. but I can't put you on the show because you're not over the age of 18. But it's good to see that you're back again. So the government is currently not recalling old gold coins nor issuing a formal order for the return of gold to banks. Historically, in 1933, President Roosevelt issued an order required Americans to turn their gold in, but such actions do not apply in today's society as the rights to own gold were fully restored and private gold ownership is still legal in the United States. Currently, gold is such as the 2025 US $5 American Gold Eagle coin are being sold by the government, but there is no government recall or mandatory return order for the gold coins. Now, in recent years, there have been discussions about revaluing gold reserves to reflect market value, and the government has programs like gold monetization, where deposited gold is converted to billions or coins, but these are voluntary schemes rather than forced recalls. Also, the government may require gold, including coins, to be deposited under specific schemes, but in general, there is no ongoing directive requiring um, citizens to return old gold to the bank by force or mandatory recall order. So to clarify, the government is not recalling old gold coinage nor ordering gold to be returned to the banks at this time. Any gold transaction today are mostly part of voluntary purchases, sales, or monetary schemes not recalled. And you have to remember that the term scheme is, in this particular context, utilized as a plan of action or ongoing program that is being performed by a large group of individuals. It is not a plot or underhanded scam. So you got to understand the difference between scheme as plan of action versus scam as the anonymous uh, um, users on the channel that are popping up with the monetary bullshit that they put up on the show. That's the best way that I can describe it. Uh, well, the central bank is buying gold. Yes, the large gold is being bought in mass quantities. But the thing is that the gold is not use. You made the comment that um, all gold will need to be returned to the bank. If something happened where gold was taken from the Central World Bank that wasn't authorized to be returned, to be taken, that gold would be returned. But the actual day-to-day possession of gold is not being instructed at any way, shape, or form by either the World Bank or the U.S. government to be taken away from those individuals who lawfully purchased the gold. So that's the difference. Um, yeah, but I'll take a look for you and see what the Central World Bank is doing. So you want me to see what the because this is what you have to do when you don't know what's going on. You have to ask the Google lady. How you doing, Dylan? We're about to get started with the main topic. We were on the side topic about the Central World Banks taking everybody's gold. And you said Michael wanted me to talk about that real quick. He said, "Ask Jeeves." Perplexity is a good search engine to use as well. More gold is being sold today due to the high cost. So central banks worldwide continue to buy gold actively in 2025, with demands from central banks being a major driver of the gold market. Central banks is emerging markets now allocate more of their reserves to gold, increasing from 15% of their reserves a decade ago to around 20% of their reserves today, seeking to diversify away from the United States dollar. In most countries, I talked about this on Saturday, most countries are doing this, um, hedging against currency and inflation risks, because, I mean, we be shutting down. We don't be people who are backed by us are backed by broke. So, you know, buying up a bunch of gold, that's like a hot chick saying, my man gonna pay for this, and your man is on food stamps, so y'all in a 5-star restaurant that don't take food stamps, you're backed by broke. So it's not gonna work that way. Now, this year we're witnessing one of the strongest periods of central bank gold buying in recent memory, with purchases expected to exceed 900 tons in 2025 alone, making official gold holdings more valuable than U.S. treasuries for the first time since 1966. Now, specifically, many central banks, including Portland, Turkey, China, Kazakhstan, which y'all got to go to Kazakhstan, that's a place to go, and other places, have increased their gold reserves steadily. And if you can afford it, I would suggest do it. But if you can't afford it, you know, I would I would suggest that you not try it. um, These are some of the largest buyers. Now, even with gold prices at record highs, central banks remain committed to acquiring gold as a strategic asset and insurance policy against global financial um, uncertainty. So, against a 2025, August of 2025, we saw a notable rebound in buying deposit despite the high prices, emphasizing ongoing interest in gold accumulation. So, central bank is buying gold. Uh, Good saying. Special shout out to Aladdin. He said, "We make a living by what we get, and we make a life by what we give." Okay, I like that. I like that. When I withdrew my 4 gold bars from the bank vault, I thought they asked for. Uh, I thought they asked for what, so I replied, "Just for that's it." They thought it meant 4. So apparently I have more of them. Sheesh. Uh, you got the 1 ounce billiards, right? Or do you have like the bricks? Because when people talk to me about gold bars, I think about the gold bars that sometimes, if you're not strong enough, takes 2 hands to pick up off the ground like a black man's dick. Now, when you're talking about gold bars, like a Kit Kat bar size gold billiard, it might be like shaped like a rectangle, but it's just a 1 ounce thing. And that's the reason why, because I think about big dog bars. I don't think about the small shit. I don't think about he said, remember, they are just these 1 ounce bars in the packaging. That's what a lot of Americans have. I want the ones that are like sheets of paper, like the big, like, the ones that like on Austin Powers or something like that. Like you open the vault and you got them bitches like tiered up in a pyramid, and you got to put them into a bag and take them somewhere. I want something like that. But then that's me asking to get robbed, because if I start unloading bars into my bag, I'm gonna have to walk around like Blade Trinity with assault rifles and everything. Well, of course, if you're buying 1 ounce gold bars, if especially if they're not pure gold, because they could be pure gold, but they could be not pure gold, and they could have been cheaper when they were sold, because gold is very flimsy. So if you can't do this and bend it, it's probably got other metals in it, and it's not 100% gold, but it does have enough gold in it to have some gold value. Now, the thing is that if you were buying them at like $50 an ounce because it was less gold than it was metal, then you probably got you quite a few of them in there. But hypothetically, if you had these pure gold bars, like more than 90% gold bars, when you pulled out 4 of them, you pulled out $17,000. Now, I would be asking myself, how many of these do I really have? And can I put this someplace safe? Because when I run out of cash, I will have to use these bars, 1 bar per month, to cover my standard of living. And if you go to a pawn shop, they're only going to give you $2,500 for it. So you got to be careful with that. You say maybe I guess about 5 or 6 more at the most, because the box is quite small at the bank. Oh yeah. Called the delivery bar. Oh shit. Why 24.4 pounds? That man does not need to work. If you got 5 or 6 of them, 24.7 pounds at $4,000 an ounce, 27 pounds is a lot of gold. But let's tiptoe into today's topic real quick, because I ironically have a client right at 2 o'clock. So we'll be here for about an hour and a half, roughly. Actually, yeah, about an hour and a half, maybe 2. You must have 7 left. You make it seem like you just spent 4. You got 7. Oh no, see, I thought you had 27.4 ounces, because he said delivery bar at 27.4 pounds. And if you had 27.4 pounds of gold at 99%, you have a lot of money on your hands. But seven bars at $4,000 a bar, $4,200 a bar, you're operating at like $28,000. That's 1 year's salary in the Philippines. Yeah, that's not a lot. That's not a lot in the United States. That's like 1 month in California. Oh, see, exactly. You're sold them for 2,500. Them shits is going for way more than that. You need to be trying to negotiate for like 3,200 or something like that. See, stuff is only worth what people are willing to pay for it. So while the documented value of it is 4,000 and some change, the physical acquisition of it, you're only going to get 2,500. So technically, it's currently worth 2,500 a bar, which is a ripoff in my account. Not if you bought them for less than $2,500 a bar. If you bought them for like $50 a bar or $150 a bar, and now people are willing to give you $2,500 for it, that's a profit. But the $2,500 an ounce, when the market has it at $4,000 an ounce, I'd be a little bit pissed off. But they're not going to give you dollar for dollar exchange on it, because they're going to buy it at a discount because you're selling it in order for them to have a profit off of it themselves. So, you do have a kilo of silver. Well, at least it's a kilo of silver, because you could have had a kilo of something else, and then we'd have to be careful with our conversations. I was a paperweight on my desk. That's good. That's probably what I would use it for. I would probably, instead of selling them, I would probably have them on display after my guns, so that if you make it that far, you will get shot. Now, guys, there are moments in the market that can define whole generations of investors. Times when the ground shifts so much that fortunes are made and lost, seemingly in the blink of an eye. And most people only recognize these moments when they're looking in the rear view mirror. They'll talk about a once in a lifetime buying opportunity long after they've passed. The way these guys are running up here talking about getting cryptocurrencies and buying gold and silver So because the stock market's crashing, stock market's bouncing back, guys. It should show a massive return coming soon. They kick themselves when they're thinking about this for not seeing the writing on the walls just before a sector collapsed, or before things started exploding in their favor, started going from being bearish to bull. And right now we're standing on the edge of two such moments because they are happening in plain sight. Yet almost everyone is missing the real story. Uh, Record-breaking online sales today figures, and the sales figures here, and landmark international pharmaceutical agreements that just happened uh, are about to send shockwaves through the market. So while a handful of investors who see what's really going on are poised for explosive gains. So those who ignored these seismic shifts, these massive changes that have happened, uh, the ones who just read the headlines and move on could see their portfolios get hammered in the coming months, which is the fear that people are being tested by with individuals that go and come uh, screaming about only going in one direction, sell all your assets and only go in one direction. He said, moving trading places with Eddie Murphy. Yeah, that was a good movie. That's way back in the day. That goes to show you how old we are. Today, we're going to show you what's what. And we're not just scattering the surface uh, with a little bit of information. We're actually going to dissect these shifts, and then we're going to expose the hidden dangers that could trap the unprepared. And then we're going to pinpoint specific opportunities that could fundamentally reshape your wealth. So you might want to turn off your notifications for other places because this information demands your full attention. You do want to hit the notification button on this channel because we are going to be giving you deep dives like this every day of the week. Now we're going to start with the first seismic shift, which is a phenomenon that everybody saw, but a few have truly understood. The recent explosion in online retail sales. Headlines were everywhere. Cyber Monday 2025 has been officially crowded, and it is crowned the biggest online shopping day in history as of today, Monday evening. In the United States, consumers who had already spent a staggering $9.1 billion online. Oh, he got it at the pawn. Yep, pawn shop is the worst place to go. I would go to a jewelry store. You broke a tooth eating gold on top of steak and mashed potatoes. Look, exactly. I would have taken it to a jewelry store. Pawn shops bank on desperation. Jewelry stores negotiate on business. I would take my gold bars to a jewelry store because they're gonna melt the gold down and use it to make jewelry. You bring it over there, they could use your 1 ounce because your 1 ounce gold bar might make like 3 rings for them, depending on what's going on. Your 1 ounce gold might make 1 ring for them. They could use your thing. So I would shop around instead of just running to the nearest pawn shop. You run to the nearest pawn shop when like you don't have any money and your probation officer is following you and you got to hurry up and pay him. So the that's the kind of situation that you need to go to the pawn shop for. You got a warrant for your arrest and you got to buy off the cops. That's what you use the pawn shop for. But if you're just like investing, trading, you're just trying to get you a couple extra dollars to do something different with the money that you don't want to take out of the bank, I would negotiate that with somebody else. Either make gold like sheets that you can eat. Okay, Goldschlager actually puts gold metal flakes in the alcohol. And as stunning as that is for someone else to buy the drink and I drink the drink, I don't feel as rich people might feel when I'm shitting gold. I feel like that was a waste of money. I wonder with people losing jobs, how soon before people burn down their house for insurance? Well, here's the thing. Um, People are not burning down their houses like talking about it for the insurance because they don't have another place to go. If you had extra properties, then you could do some Sopranos style let it burn in the middle of the night, get paid arson style scenario. But your primary homestead not likely to be done just for the sake of the money. They would probably more often than not unexpectedly lose a family member to get the insurance policy instead of burning down the house. So with times being tough right now, if you know somebody that is on a very expensive insurance policy, tell them to stay healthy. The people who get desperate before they burn down their house and have nowhere to live, I think the life insurance policy would happen before the homeowner's insurance policy would happen. I think a car crash insurance policy might happen before a. Are you Snoop Dogg? No, no, I'm not even a distant relative. So you're saying the house will eat them? I'm confused. No, I'm saying that instead of burning down the house, I'm saying that people who will take action to receive benefits from life insurance policies instead of homeowners insurance policies. That's what I'm saying. Yep, they'll sell their gold watches, their Hamilton watches, their Rolex watches, their girlfriend. They'll sell whatever they can before they start destroying stuff. And then when they can't sell it anymore, then, they will liquidate assets like, the life insurance policy on the wife that's no longer usable. Some of these women know how to do more than hot grits. Some of these women know how you got to watch what you eat these days. Boy, you be going up in there trying to get you a sandwich and come out with your stomach outside of you. You know what I mean? They people do it for the insurance money now. Oh yeah, they set your car on fire and everything like that. It's crazy. Now we have final projections for today about our online shopping, pointing to a figure around 13.9 billion and a little bit closer to 14.2 billion dollars, making it the biggest online shopping day of the year. Broke folks sit on their money for 3 weeks so that they can go and buy a bunch of stuff between Friday and Monday right after Thanksgiving. Um, I'm going to be honest with you. Black Friday should be a holiday uh, because it's black. And on Black Friday, I do what all black people should do on Black Friday. Absolutely nothing. We work too hard the rest of the year. We should just stop that day and just chill. But yeah, that's just my opinion. Is it motorcycle, airplane, boats? Oh, I was thinking about airplane stereo systems, big ass TVs, stuff like that. My guess goal is doing a 250,000 by next week. No, I was gonna talk about that tomorrow, but I heard that it was supposed to be by the end of 2026 doing a $250,000 outcome. It just tanked. So here's the thing. I projected this last week on Thursday or Friday when Bra Logic was here. I told everybody exactly what just happened was gonna happen. The first thing I said was that rich people take their money out of their investments for the holidays. So right after Halloween, they take their money out for Thanksgiving, and then they take their money out one more time before Christmas. it is when you're thinking about a few $100,000 here and there, it is anywhere between 2 to 3 weeks to get your money. So this big dip right now for the first week of December is so that they have enough money to buy their Christmas presents by the 25th of December. Now, I don't believe that gold is going to go back to $250,000 by next week. And the reason why I'm saying by next week is because they're still Christmas shopping. Now, they'll put the money back by week 3 so that by week 4 it is on the books, so that by the time they get ready to do their taxes, that all of their investment opportunities are claimed as losses because they bought into something and didn't get any money back. But as it stands right now, I don't see next week being 250,000 from 84,000. But I could always be wrong. I could always be wrong. I track macro level changes, and I've been tracking these macro level changes for about 15 years. And the only thing that has changed, especially with Bitcoin, was things like uh, um, the Trump policies that were enforcing cryptocurrency. But gold is not going to $250,000 by next week. That's not true. The not gold, cryptocurrency is going to be upward of $250,000 by the end of next week. Definitely not gold. Gold will be between $5,000 and $6,000 by the end of next year. So by the end of 2025, gold will be closer to $5,000, not $250,000. 2,000 per ounce. Maybe we can build a large house or apartment where we can build wealth from. Well, if you get an apartment complex, you are on the fast track to building wealth, because if you own a multi-unit facility and they're paying you the rent money, the money that you don't have to spend is money that you're saving. You can utilize that money to do other things with and start expanding and buying more apartment complexes. The more your standard of living is paid, and then the more that you reinvest into the situation, the more you have access to. So um, uh, your ability to invest in things and leverage with your assets is greater once you start getting apartment complexes. But you can do is you can start with a single family home and leverage that single family home for another single family home, and then leverage the you know what I'm saying, and double that down. But uh, it's not something that actually happens on a regular basis for the average American. Is a cool story. I just bought my 4th robot for my house. The vacuum cleaners, it's better than buying women for first name masters. I just hired my first butler. Uh, Feels great. What should it call me? My last name is well, if your last name is Bates, you should call yourself Norman. Or you can follow Michael's recommendation. Now, globally, the numbers have been pretty breathtaking. By midday today, sales had already hit about 17.3 billion, with a full day projection to soar past 52.7 billion. So the entire 5-day Cyber Week period from Thanksgiving through Cyber Monday was expected to drive $43.7 billion online sales. And this is in the United States alone, showing a robust 6.3% growth year over year. On the surface, this looks like a straightforward story. Consumers are spending more online, and based on that, the average investor will think, great, I'll buy Amazon stock, and they wouldn't be entirely wrong, but they'd be missing the tectonic plates that actually move underneath the entire retail sector. Yeah, exactly, Norman Bates. Yeah, we're still in Cyber Monday at least. Well, for some places on the East Coast, Cyber Monday is currently over, but on the Central America and on the West Coast, we still got about 45 minutes to an hour and 45 minutes for Cyber Monday. Now, this is a story about how that spending is happening. So this is the story of a silent and complete takeover of e-commerce, but artificial intelligence is what's running the show here. So the problem is when most investors hear AI and e-commerce, they think of simple chatbots or maybe the product recommendation bar at the bottom of the web page. They are dangerously underestimating the scale of the revolution. The global market for AI in e commerce is expected to hit $8.65 billion this year, and that number doesn't even capture the sheer speed of its impact. One of the reasons why we talked about BBAI as an investment opportunity. So here is the data that should make every investor pay attention. Shoppers who use an AI-powered chat convert at a rate of 12.3% compared to just 3.1%. And for those who don't, let me repeat that because it's a heart of the entire shift. AI-driven shoppers are converting 4 times more effectively than the ones who don't. This is a paradigm shift. For years, the global or gospel behind this digital marketing was pouring money into social media ads, and that era is rapidly closing. So we're not getting the money that we used to, or the profits that we used to get off of our investments for social media ads. Now we're witnessing a monumental migration of influence and purchasing power away from human-driven social networks and into the hands of intelligence, automated systems. Some businesses are already reporting that AI chatbots are driving conversion rates as high as 70% in specific industries. On average, e-commerce sits in an area where the sites are using chatbots with conversion rates improving by up to 30%. This isn't just about making checkouts smoother. AI is now the central nervous system for successful online retail. It manages hyper-personalized marketing, dynamically adjusts prices in real time, and most critically, predicts future customer behavior with startling accuracy. This is one of the reasons why when you're on the internet long enough, 3 to 5 different inquiries, you end up getting ads directly related to the stuff that you were searching. Yeah. So if you type in grenade, landmine, assault rifle, and then explosives, and then how to, guess what you'll end up with? A whole algorithm showing you all kinds of stuff that could put you on a watch list. Yes, yes, exactly. Now, AI algorithms are analyzing every click that you make, every pause, which means that just because you didn't like that video, if you lingered on that video for a few seconds, it takes that into consideration. And then every abandoned cart that occurs to create a shopping experience so tailored that it feels less like browsing and more like a conversation with a personal shopper who knows exactly what you want before you do. So what does this mean? Because guess what? We're also going to be talking about the pharmaceutical thing that happened. So I want you guys to hang out with me because we're almost there. Um, what does this mean for your portfolio, though? It means that if your investment thesis for the retail sector is based on 2024 logic, you're already behind. The market is about to split, creating a huge gap between companies that master this new AI-driven ecosystem and those left clenching the old ways. So the first hidden risk is margin compression for the laggards. The headlines screamed about record sales, but they don't talk as much about the cost. Discounts were steep this year. Electronics were discounted by an average of 31% on Cyber Monday, and that was in 2024. Companies without sophisticated AI pricing engines were forced into a race to the bottom, offering blanket discounts that crush their profitability. They're fighting a 21st century war with the 20th century weapons, and it's crazy the way they're doing it. While their AI powered competitors use dynamic pricing to offer a personalized discount to specific customers based on their predicted likelihood to buy, the laggards are just slashing prices across the board, losing potential profits on every single transaction. So you have AIs that are encouraging individuals that say, hey, if you buy X, Y, and Z, we might give you A, B, and C. Buy 4 tires, get 1 free. Buy a lifetime alignment for twice as much, and we'll give you an alignment anywhere in the world. Most people on average only get 2 alignments over the life of their car unless they have custom rims. Marketing strategies. The second risk that we have is the illusion of growth, because while sales dollars are up, some of the simple uh, observations here, because prices are higher, are products sizes or smaller. We're thinking that things are getting better. People are buying more of something because of shrinkflation, because unit sizes have shrunk a lot. Then we're dealing with price changes. Salesforce data noted that on Cyber Monday, while US online sales dollars rose, the actual number of online orders declined by 1% from a year ago, meaning less people bought more stuff. Yeah, that part. Now, this is a critical distinction. An unprepared investor sees record sales headlines and think the company is selling more stuff. The savvy investor digs deeper and asks, is the volume of goods sold increasing, or are they charging more for the same or less? That's what's going on. Yeah, even the eggs have gotten smaller. We used to have big old goose eggs. You used to be able to have 1 to 2 eggs be a big breakfast, and now you need 3 to 5 eggs to be a decent breakfast. The third thing, and perhaps most sneaky risk, is the rising tide of fragile consumer credits, because we've talked about this credit throughout the year. People are dealing with these buy now, pay laters, because another engine this year that has encouraged the sales booms was the explosive growth of individuals' capabilities of using these buy now, pay later services. And you see them online. You put $2,000 into the cart, and you get you a buy now, pay later. You're paying $100 a month for the next 20 months, and they don't care, because that's cheaper than paying for all of that up front. Buy now, pay later spending was projected to drive over $20 billion in online spending this holiday season. On Cyber Monday alone, spending through these services was expected to hit nearly $1 billion. 20 times more is what we actually achieved. And while this juices sales in the short term, it creates a looming credit risk. What happens when overextended consumers start to default? We also recognize that individuals with moderate credit levels uh, continuously use these buy now, pay laters because they don't get everything in one spot. It ends up negatively impacting their ability to get better loans for better things. Like your car loan is going to be denied because of infrequency, or the frequency of um, borrowing is going to impact your qualifications for buying a house if you're financing a house. It's a lot of stuff. It's a lot of stuff. Those are the two big things. It also impacts your, because they do a credit pull to see if you qualify to upgrade your cell phone. So you got to really think to yourself, do I really want to upgrade? Because if they're going to offer you a payment plan, they're going to run a credit report on you. So you want to think about these things. We both know where I get my Christmas presents from. Yeah, you go to the estate sales. Um, when the individuals default on their loans, it will hit the buy now, pay later providers first, but the fallout will spread to the retailers who depend on this financing to move their products. Because when the customers don't qualify, they're going to end up not being able to get the installments, and then the sales is going to drop dramatically. Oh, Michael, we have a troll wondering if there are individuals that would like to talk to him in the chat. So I'm in the chat, Dylan's in the chat, Michael's in the chat. We had um, Sir Mod in the chat who came out asking about cracking wise about butlers. We have aluminum sprinkles in the chat asking me if I'm Snoop Dogg. You can tell that there are legitimate people with non-legitimate individuals in the chat because they ask ridiculous questions like, "Is this a scam?" Well, no, it wouldn't be a scam. You would be scamming us by coming into the room and asking these ridiculous questions. But, you know, the fact that this is a highly interactive podcast and you guys are capable of performing appropriately, you know, your finger's ready. I know, right? We have Master Bates in this room. So he's got his finger ready. Shit, I took action on it already. Yeah, we got a lot of people coming through here. We have plenty of people that are watching us on Twitter, and we have plenty of people that's watching us on Twitch. And then once I figure out when we're going to um, add TikTok on, then you'll see extra people in here. I did answer your question because it's not a scam. Telling people what's going on in the market so that they can make their own decisions in order for them to invest in ways that they didn't think to invest is not a scam. Telling you to get the secrets in investing by giving me a bunch of money, that would be a scam. I have not told you to give me $1. I told you to show up every day, hang out, and learn some shit. If you Google it, you can verify all the information that I tell you is legit. But if you don't listen to me, then, I mean, that's on you. Now, the average investor is going to ignore a lot of the risks involved with the buy now, pay laters, and they'll chase the headline numbers and buy the obvious retail names. The only thing that they're going to be dealing with here is that they're going to be blindsided when margins collapse really soon and the consumer credit lines cycle turns south. They'll be left holding the bag, but we won't be, because we are going to look where the real sustainable value is being created. So only weak minds think smart people are weird. Well, I completely agree with that. And lonely people troll podcasts to get attention. Yeah, they're getting their laugh when they make a comment and they get a reaction from it because they're like, oh, he's talking to me. Like, but the fact is that when they log off, they're still exceptionally lonely and probably even broke. So to capitalize on this seismic shift, we had to look past the storefronts and invest in the infrastructure. So the real winners of a gold rush, metaphorically, are rarely the individual prospects. They're the companies selling the picks and the shovels. And in AI commerce revolutions, the pick and shovel are the platforms, software, and payment processors that form the backbone of this new digital economy, not the actual products that are being sold through these devices. So here, ain't nobody, we're about to tell you that when you invest in Amazon instead of investing in the software that Amazon uses, you're you're doing all right by investing in Amazon, but you could be doing better by investing in like Oracle, for example, to get more money the um, off of the software. Well, some other guy came jumping onto the show talking about some AI was a bubble. I've never said that. Oh, you got him before I could get him. It's not often I find another black man that are into stock markets. I don't really do podcasts either, but I commend you all, and I'm a new supporter. I appreciate that. This is one of the reasons why I give you guys the opportunity to linger long enough to realize that this is a real deal. Black folks don't get the good credit that they supposed to get. We typically treat it as rappers and drug dealers and gang members, and we they got some smart minds in the hood. Like those of us that know where to go and buy their stuff at a good deal, get that mechanic that knows how to fix whatever it is that's broken, and being able to make, save, and invest money. You don't see that very day. So it's enthusiastic when individuals uh, show up and they really appreciate what we've got to offer. And then being a man in and of itself, it's hard to be on social media trying to run a podcast because people stay for the podcast because they're learning something, but they didn't come because I'm an attractive female, and it definitely didn't come because I'm a minority, wondering why I didn't get deported either. So I do this to provide you guys with the knowledge that y'all need to be successful, because the goal is to provide you with what should be common knowledge, but it's not common because there's so much stuff on the internet. That's the reason why Ask Nobody is still trying to press the thing that AI is in a bubble. AI is not in a bubble. AI is on the mainstream of development. They're the cornerstone of the industry, of the United States industry's next generation. We have not received a bubble yet. Okay, when it comes down to AI and technology, if anything, it's a tsunami, and you're at the beginning of it. So if you jump on before it gets too big, you can afford to ride the wave. But I mean, if you just sit back and you know try to make it seem like nothing will come from it, then you'll be broke. Everybody right now that knows Macintosh, when Macintosh used to be called Apple and it was actually a freaking Apple, back with the floppy disk, y'all know what I'm talking about, when all we had was Lemonade Tycoon on it. If we would have knew back then how big this could have became, we would have been owning stock. When now it's worth so much money, we would have been billionaires. When people started doing bottled water way back in the day, if we would have invested in that, I got 3 bottles of water next to the computer, we'd be billionaires. But nobody thinks about stuff like that. So when you say that AI is in a bubble, you're implying that you're not going to profit off of AI. And that's not true. You can profit off of AI. You just have to be wise enough to do your research in the company before you go. And while um, um, we're talking about it, I actually want to tell you guys, if you put your money towards plastic straws and plastic products, since Donald Trump made an executive order to switch from paper to plastic, you could turn over profits off of that. They truly say the necessity is the birthplace of invention. Special shout out to Quantum Chromatics. We have a sound foundation to work with here. Yeah, we can build a lot on this show because this is the first multi-platform, live, highly interactive podcast. There are days where Twitter fans are talking to TikTok fans, talking to YouTube fans, talking to Twitch fans, where everybody's talking to me. There are days where some people just come and listen because they want to hear what's going on, but they don't have the ability to type while they're driving their car or they're taking care of a family member. I had Bayside come and tell me how Bayside, and then also Chris Bartholomew uh, taking care of family members, and they were listening to the show in the background, but they were doing what they had to do at the same time. So while they're on, special shout out to them, they don't actually text on a regular basis. So, I don't expect to have a large podcast full of people. Do you know how hard it is for me to follow the comment section if at least 100 of all of y'all out of the 83 something thousand y'all that are up here were actually commenting? You know how hard it would be for me to keep track of the comment section? People would have to start paying money to get their comment paid attention to because there'll be so much comments going on. But the fact that the people who do come and learn something, that's what matters. Because unlike podcasts like Fresh and Fit and the whatever podcast, there are like millions of people that are only complaining about a problem and never trying to find a solution. The fact is that this podcast is the only podcast around the world that finds an issue that the everyday person goes through and finds a solution for it so that you can make decisions to improve your life. Only podcast that does it, right? Now, we're going to analyze a few key players in this position that's going to capture the values of the Cyber Monday scenario. When people think of Adobe, they often think of Photoshop or PDFs, and that's dangerously outdated views. Today, Adobe is the benchmark in digital experience and marketing analytics, making it a prime beneficiary of the AI e-commerce shift. So Adobe Experience Cloud, places y'all can be investing right now, is the software backbone for thousands of world's largest online retailers. Why are they so critical? Because they provide the very tools that enable the hyper personalization that we've been discussing throughout tonight's show. It's Adobe software that tracks trillions of visits to retail sites and analyzes customer behavior. It's their AI engine, Adobe Sensei, that lets companies predict purchasing behavior and automate targeted marketing. When we read Cyber Monday sales projecting to be 14.2 billion, that data comes directly from Adobe Analytics. So highlighting just how embedded they are in the fabric of e-commerce is something that we need to remember. Now, as more companies realize that they need to upgrade their digital operations, they will inevitably turn to Adobe's comprehensive suite of tools. And this creates a powerful recurring revenue stream that insulated from the margin pressures individual retail faces. Because if majority of the retail companies are using this platform, it doesn't matter if any one individual company does good or bad in sales if the overall market is receiving an inflated flux in sales. Now, the risk for Adobe is, of course, competition and a high valuation that already prices in significant growth. However, their deep integration into corporate marketing gives them a powerful competitive advantage. So if Adobe provides the brain for a large enterprise, Shopify provides the turnkey solution for millions of small and medium-sized businesses. He says, as an ML engineer, worked at a Meta for 6 years. Oh, bless your heart. I see how widely AI is misunderstood. Generative AI hype fuels a bubble. People overestimate its power and ignores that most AI is narrow and practical. Well, they keep screaming that AI is a bubble, like it's a here today, gone tomorrow situation. AI might start off as a widely utilized trend, but human nature is dependability on laziness and procrastination. When we get used to AI replacing our effort, first, we're going to increase productivity because we're so used to working so hard to get this work out that now that this AI can help us get the work done, we're going to be getting more stuff done in the same period of time that we used to do it. Then the phase two is the dependability. Because once we realize that we can do 10 hours worth of time in 2 hours, we're going to start sitting down in 3 hours and trying to get it done in an hour and 45 minutes so that we can have extra time off. It is not a bubble. It is guaranteedly going to become standard operating procedure. It hasn't become mainstream for every avenue of life because we can't afford it. Most Americans can't afford the service fee to utilize all this. Brian says, not true. AI has used human interactions as well as internet searches, as well as activity for fuel. So I can tell you've never worked at Meta. Well, just because you worked at Meta does not mean that you're both not correct. Because artificial intelligence does enhance itself from the use of human interactions, and it does benefit from internet searches being utilized, and that does fuel the functionality of the individual AI product. However, generative AI is hyped as a bubble, and they are definitely overestimating the practicality. Well, they're underestimating the practicality and overestimating the market trends in it. So from a investor standpoint, yeah, the ideology that this is a bubble, probably a misconception. But from the user interface side of things, yeah, Brian, Brianna, or Brian Namo Lauer, that got to put some spaces in there. uh, yeah, for the interaction part, it is a thing. It is something that's going to make a little bit of a difference. Now, for a long time, though, guys, Shopify was seen as just a simple website builder. And we were talking about how you can get some of those hot side hustles together by starting up online stores. But Shopify has evolved into complete commerce operating systems. Shopify's power lies in market sophisticated online retail accessible to everyone. So on Black Friday alone, Shopify merchants rank in the record 6.2 billion in sales worldwide, with sales peaking at $5.1 million per minute, which is a shit ton of money. And Shopify understands the AI shift intimately. They are integrating AI tools directly into their platforms from Shopify Magic, which helps merchants write product descriptions to advanced analytics that help them understand consumers. He says generative AI likes GTP models, and GTP is okay, but I can tell you that there are better AI platforms out there, in my opinion, like Perplexity, that does a damn good job. organizing and calculating this stuff. And vidIQ, links to vidIQ in a description, that if you're doing script writing and stuff, can organize this information for your podcast if you're trying to do so. He says, not intelligent agents, right? So we're that's what I was saying, Quantum, that you guys are both in a sense right for what you're exclusively talking about, because you weren't really talking about the intelligence agents themselves. You were talking about the market in which AI was functioning, and that's two different things. People don't understand the interactions between how AI impacts profit margins. When you see that sales went up in consumer products, people think, oh, let me invest in consumer products. But if the sales went up because of the interaction between the consumer and the sale of the product, the AI is going to be where the profits are going to be at. Now, the investment thesis is simple. As more entrepreneurs start online businesses, Shopify's market is going to expand. They win not when a specific store succeeds, but when the entire ecosystem of independent online retail thrives. So they are the ultimate pick and shovel play for the decentralization of commerce. And we actually have to talk about the decentralization of the US really soon as well. Now, the risks are going to be clear here because we have intense competition and a notoriously volatile stock. However, their relentless focus on empowering merchants makes them a long-term powerhouse. And next, hold on, he says, fun fact, GTP is not a commercial model. It's just a name for a framework called generative pre-trained transformer that chat GTP, cloud perplexity, and all gen AI is based on. So cloud perplexity, chat GTP, and other generational AIs are built off of the fundamental platform of chat GTP. That's like starting your car by touching two wires together instead of using the key. Now let's talk about the plumbing. Then we're going to get into something. We're going to get into this pharmaceutical thing real quick. Now, none of the record-breaking sales happen without a seamless, secure, and global payment system. And the modern digital payments, Adyen, is a silent giant. Not too many people know this place, Adyen. While consumers might be more familiar with PayPal or Stripe, Adyen has carved out a dominant position by providing a single unified platform for enterprise level business to accept payments online, on mobile, and in stores anywhere in the world. Why is Adyen a pure play on the AI commerce revolution, you might ask? Because they turn payments from a simple transaction into a source of intelligence. Their platform provides a wealth of data that can be fed directly into a company's AI model. By processing payments across all channels, they give business a 360-degree view of the customers. And this data is invaluable for everything from fraud detection to personalizing marketing offers. As e-commerce becomes more global and complex, the need for a unified payments platform like Adyen's becomes more acute. Now, the risk with Adyen's is, now notice, I'm not telling you Target, Walmart, Temu, anything like that. I'm talking about all the AI that actually runs all of those platforms. The risk with Adyen is that the payment space is incredibly competitive. However, their technology first approach and focus on the enterprise market have given them a significant edge. By focusing on these infrastructure players, we position ourselves to profit from the entire e-commerce wave rather than trying to bet on which individual boat will win the race. See? This is the kind of deep level analysis that we do here. And we don't chase the headlines, we uncover the real stories that move markets. Because if you're getting value from anything that we're breaking down with you, you guys got to stop and think, why have you not hit that like and subscribe button on the show yet? I want you guys to stay ahead of the curve. So take a second, hit that subscription button, hit the like button, hit the notification button. If you're following us on Twitter or Twitch, hit the like and subscribe button, turn it on with the notifications, because you don't want to miss any of the information that we have coming up next, especially since tomorrow we're going to be telling you guys about the big crypto crash and where crypto is going to be headed coming soon. Now, let's turn to the second seismic shift of the show, because I told you guys that we were going to be covering pharmaceuticals and we were going to be covering Cyber Monday. One shift that not too many people have been thinking about is far more complex and much less understood, but the new pharmaceutical agreement between the United States and the United Kingdom just recently happened. And on the surface, the headlines are focusing on one thing and one thing only: a $0 tariff trade deal. And I'm going to say it again so that y'all don't get me misquoted. A $0 tariff trade deal. The United States and the United Kingdom reached an agreement in principle to establish zero tariffs on pharmaceutical products for at least 3 years. And the one reason Trump's only going to be in office for 3 more years, so he can't make a guarantee for year 4. So the average investor reads this as one of the things they're going to think about. Okay, good, for drug companies, lower costs and maybe a small bump in profits. They file it away as a minor positive and move on. Wrong move. This is a huge misrepresentation of what just happened. The tariff agreement is a smokescreen because it's the cover story for a much deeper restructuring of drug pricing and market access in one of the world's most important healthcare markets. The real story isn't about the tariffs. It's about the concession the United Kingdom made to get that deal. Concessions that will unlock billions for a very specific set of pharmaceutical companies. To understand the magnitude of this shift, we need to understand the tense environment that preceded it. Because for years, the United Kingdom pharmaceutical market has been notoriously difficult, and the government's cost containment framework forced companies to pay massive rebates back to the National Health Service. In 2025, these rebate rates has become unbearable. Talks between the government and industry broke down in August of 2025, right before the shutdown, and this punitive environment was causing a capital fight. People were taking off. They didn't want to deal with the bullshit. Big Pharma was openly rebelling against governmental expectations. And in September of 2025, right before the shutdown, AstraZeneca, Britain's largest drug maker, paused a £200 million investment in its Cambridge research site. U.S. giant Mark and Co. had also abandoned plans for a new research center in London, and Eli Lilly put a planned London lab on hold. The message was clear. The United Kingdom's pricing policies were making it an unattractive place to invest and launch new medicines. Now, this is the critical context for the US-UK deal. The United States argued that American patients were unfairly subsidizing lower prices in countries like the United Kingdom. The United Kingdom, facing an exodus of investment, was desperate to restore its competitiveness. Now, a lot of people don't like the man, but he said, why are we paying so much money so that you can offer the product at a cheaper price in other countries? All I'm trying to say is looking out for it, brother. Now, the result was a grand bargain. Now, the United States granted a zero tariff exception. And this is during his mandatory tariff to everyone thing. He's offering a zero tariff exemption. And in return, the United Kingdom fundamentally overhauled its pricing system to be more favorable to innovators. This overhaul has two core components that are the real keys to this investment thesis. First, the United Kingdom has to agree to significantly reduce the mandated rebates. The agreement signals a commitment to bringing the rebate rate down from a crippling 23.5% to a level more manageable, like right now, approximately 15% for the 2026 to 2028 period. And this is a direct dollar for dollar transfer of value from the United Kingdom's government's coffers to the bottom line of the pharmaceuticals companies. Okay? He said people are sleeping, but India boosts the best medical market, or they're boasting about the best medical market, and it offers the most affordable on effective treatments and medications. Consequently, medical tourism in India is at an all-time high. Medical tourism is eco-medicinal tourism is another term for it as well. Is extremely explosive in quarter 3 and quarter 4 of the year. I just started covering 4 months ago ecotourism and medical tourism, where people are flying around the world to go to other places to receive better medical care and more extravagant as well as affordable vacation spots. And if you are investing, these are good places. When you start looking at medical tourism platforms as an investor, you want to really start thinking about that, because that is the next big thing. It has been on the rise for, like I said, 4 months now. Medical tourism, ecotourism, which is it, and India is a good place to go, even though, I mean, yeah, they had the issue with Russia and India and the oil and everything like that. The fact is that, especially if you can go to a different country and get you a visa, you can fly to places that you couldn't fly to directly from the United States. You could go to the Caribbean and then go to India, whatever you want to do. But your ability to put your money in places like the advancements of medical tourism in India is an offshore investment opportunity that you can do as an American citizen if you knew about it. But had Quantum Chromatics had not talked about it on tonight's podcast while we were covering pharmaceuticals in tonight's podcast, a lot of people would have missed that very key opportunity. So when people earlier today were like, "Oh, what about, is this a scam?" Da 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 da. But this is what this podcast is about: sharing knowledge and information that the average person didn't even think about. Then you go and do your own research, and then you're able to take that knowledge and go somewhere else and try to see how much of that you can apply yourself to. It's not about give me money. It's about go get your own money. You should be able to make and invest money in ways where your money is making more money for you so that you don't have to struggle anymore. That's the goal. Now, the second thing we're going to talk about today, so special shout out to Quantum Mechanics. This is going to be even more profound. The United Kingdom has agreed to raise the cost effectiveness threshold used by its powerful gatekeeper agency, the National Institute for Health and Care Excellence, NICE. Nice. For over 2 decades, their threshold has been notoriously strict, and it is set at 20 to 30,000 pounds per quality adjusted life year. Quality, which essentially measures how much it costs to give a patient one extra year of healthy life. Many new but expensive drugs in oncology and rare diseases failed to meet this high bar. As part of the New Deal, the United Kingdom will raise this threshold to a range between 25 and 35,000 pounds per quality. This might seem like a small technical adjustment, but its impact is monumental. NICE itself estimates this change will allow it to approve an additional 3 to 5 new drugs or indications every single year. And basically what happens is that the people are over budget. And by raising the budget, people are now in the budget. Okay. And that's going to mean that medicines that previously would have been rejected on the simple cost of grounds, not safety, not effectiveness, just on cost grounds alone, how much it costs to make it, how much it costs to sell it. This new landscape creates a clear and immediate split in the pharmaceutical sector. Investors who only see zero tariffs will mistakenly assume this benefits all drug companies equally. They'll pile into big names, assuming they'll all get the lift. They couldn't be more wrong. The tariff elimination is a broad, low impact benefit. The real game changing value will be captured by a much narrower specific group. Companies with innovative drug pipelines, particularly those with new medicines that were previously on the borderline of being approved by NICE, will lose the restrictions and gain accessibility. The losers will be the companies with portfolios of older, commoditized drugs, as the new UK scheme, VPAG, treats older and newer medications differently. So you got to understand, the stuff that's been around forever, losing its value. The stuff that's just coming out, we're treating it like GTA 6. We're waiting on it. The change is exceptionally large. Another risk is that zero tariff arrangement is currently set for just 3 years. So there's no guarantee that it'll be extended because we don't know who the next president will be. And a lot of people think that Trump's going to be too old when he gets out of his term to do a third term. But I'd like to see him be the first person to die a natural cause as a president instead of assassination in his third term. But a specific cohort of companies is set to see a dramatic improvement in their revenue, and a profitability from the UK market is bound to come. And the market hasn't been priced yet. Okay, you have to realize that. So most analysts are still focused on the tariff angle by itself. And this is our opportunity to get in there and do the digging to find out what everybody else doesn't know. To capitalize on the shift, we need to identify companies that fit a specific profile. a strong pipeline of innovative drugs, a significant presence in the United Kingdom's market, and products likely to benefit from the newly raised NICE cost effectiveness threshold. So let's examine two companies. And these two companies are going to be perfectly positioned for this. As I mentioned earlier, AstraZeneca, it's the poster child for this thesis. As a United Kingdom headquartered global pharma giant, they are at the center of this storm. They were a vocal critic of the old price scheme and paused UK investments to protest it. Now, this gives them immense opportunity in operating leverage in the new, more favorable environment. AstraZeneca's, I'm going to put this in the comment section so that y'all can see the name of this company, because it is pronounced ruggedly, and I could be adding some emphasis on some names that's not being pronounced the way it should have been pronounced, but there it is right there. Their portfolio is heavily weighted towards innovation medicines, particularly in oncology, the exact category of drugs that will benefit most from the higher NICE threshold. The financial impact is going to be twofold, because first, the reduction of the rebate rate will provide a direct multi-million-dollar boost to their annual profits from existing UK sales. And second, and more importantly, a higher NICE threshold opens the door for the newest, most innovative products to gain full access to the NHS market, unlocking a previously uncertain revenue stream. The company has already committed to a massive $50 billion investment in US manufacturing, partly to de-risk from tariff threats. This new United Kingdom deal not only removes that threat, but sweetens the pot by making their home market dramatically more profitable. The risk is that as a large, well-known company, some of this good news might be quickly priced in. And that's something that we have to deal with. However, the market is unlikely to have fully quantified the long-term impact of this NICE threshold change on their pipelines. GKS, another UK-based pharmaceutical powerhouse. I'll put this one in there for y'all too. Oh, hold on. Then it popped up a widget. I'm sitting over here trying to get the... See, this is what happens when you got to get your bigger computer. I'm trying to type and it's trying to type for me. GKS. This one is in a very similar position. Like AstraZeneca, GKS was facing the same punitive rebate scheme and had also been making strategic moves to bolster its US presence, including a $30 billion investment commitment in US research and development and manufacturing. The new agreement completely changes the game. GKS has a strong portfolio and pipeline in areas like vaccines, HIV, and respiratory disease, which is why Magic Johnson left the United States and came back, and he outlived the other folks that ended up with AIDS. Woo! The improved market access in the United Kingdom directly benefits their ability to launch and profit from their next generation of products. What makes GKS particularly interesting is its renowned focus on innovation after spinning off its customer healthcare division. This deal provides a significant tailwind just as the company is hitting its stride with its new strategy. The combination of a more profitable home market and the removal of Transatlantic trade friction allows management to execute their growth plan with the greatest certainty. The risk for GKS is going to be execution. They must continue to deliver on their pipeline promise. Any clinical trial failures could offset the benefits. By targeting these two United Kingdom based innovators, we are not just making a simple bet on lower tariffs all around. We are investing in a fundamental government sanctioned repricing of pharmaceutical innovation, not the old meds, the new stuff. And that innovation rests uh, on the new enhancements of the market. And this has yet to fully appreciate in value. So we haven't actually seen the resolution of it. Now, let's put it all together. The market is being reshaped by two powerful under the radar forces. First, the e-commerce boom is not just about spending. It's about the fundamental shift to an AI-driven commercial ecosystem. The winners won't be the traditional retailers struggling with margins, but the infrastructure players like Adobe, Shopify, and Aiden. I'm going to put this up here for y'all so that y'all can go take a look at these companies and see where you would like to put your money at. Adobe, Shopify, and Aiden for those of you that are doing 16 by 9 and for those of you that are doing 9 by 16. Okay. Second, because these guys are going to be providing the essential tools for the new era. That second stroke is going to be the US UK pharma deal. And this isn't a simple tariff. Okay. And it's not a broad spectrum reduction. It's a landmark restructuring of the United Kingdom's healthcare market that dramatically improves profitability and market access for innovative drug companies like AstraZeneca and GKS. I'm going to put these guys back up there together so that y'all know the 5 companies that y'all should be looking at based on what just happened today. Okay. And these two companies now find their home markets transformed from a headwind into a powerful tailwind. Most investors will chase the headlines. They're going to buy the obvious names and wonder why their portfolios are underperforming. But you can now see beneath the surface and understand the deeper mechanics of these shifts. Now, the key is to look beyond the obvious narrative and invest in the underlying structural changes, creating sustainable long-term value. Your task now is to do your own due diligence, but you are now armed with a framework that puts you ahead of the average market participant. Because one of the things that we guys do here on This and That is give you the new questions. Because just when somebody else thought they had all the answers, I have to change the questions. And if you guys are serious about building a portfolio that is positioned for these kinds of systemic shifts, I invite you guys to make sure that you enjoy some of our investor community in our membership, because we are going to be continuing to give you guys more shows like this. We're going to be publishing in-depth research that goes even deeper than what we've discussed on today's show. So you got to make sure that if you want to get involved with our membership, that you click on the description down below to learn more. And then make sure that after you've applied for the membership that you reach out to me and let me know what's going on, and we can give you some in-depth details about how to make yourself more successful. Now, beyond that, you guys got to remember that every night of the week, even if you're not in the membership, that we go live on the show. And Monday, Tuesday, and Wednesday, we're giving you more and more information, more and more in-depth, more and more definitive, fact-driven information that helps you make informed decisions, where we break through the noise, pull back the curtain, and show you exactly what you need to see. And since tomorrow, speaking of, we're actually going to be breaking into cryptocurrency discussions where we're going to be giving you guys all the information that you need to see what happened and what will happen. And while some people believe that, gold might spike, we've already covered that. It's not gonna. It'll level off at around 5, maybe 6 by the end of the year. But 6,000, not 60. Cryptocurrencies, we're going to show you, could be $250,000 by the end of 26, but right now it is down. It went from record highs of almost 150,000 at the beginning of the year to as low as 85,000 right now. We're going to be talking, which is almost half. We're going to be talking about the normal trends of cryptocurrency tomorrow, and we're going to be telling you guys what to look forward to and when is a good time to invest, because you want to invest while it's low and sell while it's high so that you get your profits out of it. So the fact that it dipped is not bad for those of us that's not in it. It's bad for the people who's been in it since Trump got in office. But for those of us who didn't get in it yet, if you were thinking about getting in it, now's a good time to get in it. So make sure that you guys stay with us. Now, before we go, I want to say, ladies, as long as the situation doesn't make sense, I'm going to keep asking you ladies to make it make sense. So ladies, please make it make sense. And fellas, I provide y'all with this information to help y'all become higher value men. So if you find ways to make the changes in your life that you can control, then you will end up with a better life. And then the things you can't control, you navigate around. Ladies, while this is a male-driven podcast from the male's perspective, this information is not just for the men. You ladies can take this knowledge and utilize it to make yourselves higher value women as well. This is a proactive effort. Remember that you guys got to follow us 7 nights a week, because we will always be here to give you the information you need to not only improve your professional life, but also improve your personal life, because your abilities to be a higher valued individual is not just valuing your wealth, it is also valuing your character, improving your character, as well as improving your wealth. With that being said, thank you for coming to this and that. Special shout out to Quantum Mechanics, Brian Molaner, Sequential, Michael. Special shout out to Dylan. I really appreciate y'all for diving into the show. I'm your host, Xander, where we talk about this, that, and everything in between. And I will see you guys tomorrow night.
Chase validation, now I validate myself. Building inner strength, putting doubt upon the shelf. No more unnecessary drama, no more wasted time. Climbing higher, constantly making my own climb. My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity, that's my personal command. Potential knows no bounds, raising just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never yield.